The ASB commodity price index remained broadly flat in US dollar terms. However, once accounting for the sharp increase in the New Zealand dollar against the US dollar last week, the commodity price index fell about 1.5%. Looking through the detail, prices for meat and forestry continued to climb further. However, prices for dairy product eased back slightly. Despite the small declines we've seen in dairy prices over the past few weeks, prices still remain at very strong levels. A key factor behind this strength has been strength in corn and wheat markets. Indeed, we saw corn prices reach a record high yesterday, exceeding the June 2008 peak. Looking forward, weather conditions over the next growing season will be key for the direction in global commodity prices. In particular, because corn demand has been so strong, global stocks have been run down to critical levels. If we see a strong bounce back in agricultural production, we expect that corn prices will ease off current highs. However, if we have another crop failure this year, given the low level of stocks, this is likely to contribute to further increases in prices, and this will also be supportive for NZ dairy prices and meat prices going forward. The New Zealand dollar increased sharply overnight, lifting almost a full cent against the US dollar. The NZ dollar is now sitting just under 78 cents this morning against the US dollar. It was quite a sharp increase, however there was very little data to drive this direction. Nonetheless, there are a number of factors that are contributing to strong New Zealand dollar demand. Included in these is confirmation from the FOMC that quantitative easing program is likely to continue as expected. This is weighing on the US dollar and in turn providing support to the NZ dollar. In addition to this has been strong global commodity prices, which has provided strong demand for commodity currencies, including the New Zealand dollar. Finally, yesterday, we saw some quite strong Auckland housing market data. This suggests some recovery in the underlying economy and points to encouraging signs for further growth towards the end of the year. It's been a central bank bonanza this week, which has been key in driving direction for the FX markets. The Reserve Bank of Australia were first off the rank on Tuesday, leaving the cash rate on hold, largely as expected. The Reserve Bank of Australia had previously indicated it was reasonably comfortable with current monetary policy settings, which it views as mildly restrictive. Meanwhile, in the US, meeting minutes from a mid-March meeting shows that the FOMC are currently comfortable with the quantitative easing program. This has been weighing on US bond yields and the US dollar ever since. Meanwhile, turning to China, the People's Bank of China are very concerned about rising inflation pressures, and this has brought them to increase interest rates for the fourth time in 6 months. Furthermore, central bank officials still remain concerned about the amount of cash in the Chinese economy, and this points to further rate rises could be on the horizon. But all the action is expected to come from the European Central Bank tomorrow night. We are expecting the ECB to lift rates for the first time in Europe since the financial crisis.